So we just told the audience about the two big deals in recent days. Give us a sense. Is this a trend that investors should be really paying close attention to? And is there any way they can capitalize on it?
Well, it's hard not to pay attention when we're talking about deals this big. And, in the case of Hess, pretty historic company. It's been around for nearly a century. But, I think these were two cases where you had motivated sellers, CEOs nearing retirement age. And, so maybe an approach made some sense for the buyers. But oil prices around $90 a barrel tends to be more fun to run an oil company. So trying to agree on a price can be difficult, but in these cases, we had big deals consummated. So for both Pioneer and for Hess.
So Peter, hitting on something that obviously everybody's paying attention to, the rise in oil prices. Looking at oil right now, up this morning on some Middle East concerns, up about $15 a barrel since July. We had some announcements of some OPEC cuts and some other things that have been a catalyst for the price action there. How does this rise in oil prices? How does this play a factor either in M&A or a slowdown in M&A? I mean, how does that really influence what we're seeing here?
Well, I'd say today the energy industry or the traditional oil and gas industry is financially healthy. There's a lot of cash flow. Balance sheets have been repaired from where they were 3 years ago. Dividends are on the rise, buybacks are on the rise, and then in this case, you're getting some M&A. Although these two deals for Pioneer and Hess have been stock deals, the buyers, Chevron and ExxonMobil, are not increasing financial risk by doing them. They're just offering shares. So, it is a pretty good time, for these companies to invest. They've just been a little bit hesitant to do so, particularly here in the United States, as they've been practicing more capital discipline, being cautious on where and when they invest their dollars. And instead, they've been returning it to shareholders.
All right. So a lot of talk in recent days about the Permian Basin. It's one of the highest producing oil fields here in the United States. Give us a sense. How is that influencing this possible M&A story? And is there a company in your mind that's the next likely target for M&A?
Well, again, on the likely target list, it's you got to get someone who's a willing seller. At this point, and I think in the case of Pioneer and Hess, you had CEOs nearing retirement on companies that they had built and run for decades. So I think the basin has consolidated into the hands of a few companies, namely Oxy, Chevron, ConocoPhillips, and ExxonMobil. There are some other bigger players out there at different stages of their career, like EOG Resources, which is pretty diversified, or Diamondback Energy.
So a lot of possibilities, it sounds like, Peter. Is there one in your mind that's the most likely for M&A going forward?
These deals are hard to put together. So I'm not sure I could say any single one company that's going to agree to a price. The higher the oil price goes, I think it's less likely that you get someone selling.